morning, everybody. My name is Anastasia, as you know, with Best Washington Properties, and I am here today again with my favorite millennial loan officer, Kadyn.
Hello.
I'm super excited to be here today, you guys. We are going to be talking to you a bit about the theory of the market crashing. Yep.
Here at Ebony and Ivory, by the way, quick shout out here in Lacey. Amazing
That's
coffee.
right. Yes, it is the place to be. It is an amazing little shop, locally owned. So if you haven't had a chance to stop in here yet, you are going to want to. They've got a great selection of beverages.
Yeah.
So
you like lavender? We both went lavender.
We did. It was our thing today. So we just wanted to pop on and talk a little bit about this subject. We keep hearing from everybody that, there's this anticipation that the market is going to crash. And so we want to address it today.
But the thought of a crash, I think, is a bit extreme. It can be just a word people use to get people's attention. What I think will happen is we're going to see a cool down for sure. I don't think the market's going to keep doing this. It's not sustainable. Like I'm saying, like with practices. I can see it cooling down, but I want a couple of stats I looked up to back up it not crashing. Of all conventional loans out there on homes, only 2% are in forbearance. So 98% of conventional loans, people are still making payments. People are still able to afford their homes because we have better lending practices. That wasn't the case back in the mid-2000s. But that's something to look at. And then simple supply and demand economics. There's a housing gap of about 5 to 6 million homes. We're short 5 to 6 million homes from the demand that buyers that need to get in homes. So,
and of homes that are in forbearance, I mean, if you think about how much of a shortage there is currently, the homes that, let's just say that all of those homes that are in forbearance end up having to hit the market, we're still going to be in an extreme shortage. They're not going to make up for the amount of supply that we're lacking currently in the market. And I think that's such a huge thing that people are missing is that, you're talking about what, 1.2 million or so that are in forbearance, and a 5 million home deficit. That's substantial. That's not going to make up for it. So I think that's a really important piece for people to understand while they're waiting for this crash they think is coming.
Yeah, and even think people in forbearance, the amount of appreciation they've seen on their home, so they're probably still positive.
Yes.
Right? They're still going to make money even if they do have to sell. If it does get taken away by the bank, that's a different issue. Those were the two things that I wanted to touch on, as well as interest rates are going to end up going up. We've already seen it over the past 3 weeks, and the Fed is going to stop buying as many mortgage-backed securities and taper, and that's going to cause interest rates to go up. And just with the interest rates going up 1% over time, not going to happen overnight, you end up losing about $40,000 in buying power. So you can afford $40,000 less in a home.
And I think it's important for people to understand, when they're talking about waiting, they are talking about the potential that they're going to end up having a higher interest rate. And so what they're looking at that point is that, sure, if you wait, you may start to see some correction of the inflation that we're seeing. Not a significant amount. Interest rates would have to go sky high for us to see a substantial amount of correction in the market. And at that point, you're talking about a significant amount more monthly that you're spending on that mortgage. And so really when you're looking at interest rates where they are now, even if you're paying a higher price for a home because of the inflation we've seen in the market, you're still talking about your monthly mortgage being lower than it has been and will be as we start to see the interest rates continue to climb. Well, is now the time to buy or is later the time to buy? Now you're going to have more buying power than you're going to have later. And now you're going to build more equity than you are waiting until later. So significant pros to taking advantage of the market where it is currently and not waiting for this quote unquote crash, because we're not going to see a crash like we saw in 2008. Inflation or bubble, whatever you'd like to call it, I feel like in this circumstance, we're not talking about a pop of the bubble. We're talking about a slow deflate of the bubble to, kind of normalize things a little bit more. And nobody has a crystal ball, let's be honest. Nobody does. I wish I did.
No.
But the best thing we can do is listen to people the professionals that do this, have done this, have for many, many years, have accurately predicted the market. And I think that's really the important piece. because this is the biggest purchase that somebody makes in their life, that it is something that we really take to heart in servicing our clients and making sure that that experience is the best that it possibly can be, given the market circumstances. And so we want to try to make it an enjoyable experience and fun. As you guys know, that's what I aim to do. You follow me and you've seen all of that. Kadyn is on the same page with that. If not more so. We like to have a good time when doing this, but we also want to really invest in our clients and make sure that they are getting good knowledge, that the experience is good, and that they are getting the home that's right for them. So, yeah, if you guys have any further questions, don't hesitate to reach out to myself or Kadyn. We'd be happy to help. And
always on.
Yes.
Unfortunately.
Yes. And we, of course, will be back with more great information at some point here. We love talking with everybody, so we'll see you guys all soon.
Have a good day.
Bye-bye.